Now, once you guys get your opportunity, this is where everything that I've been teaching you guys today comes into play. The whole risk management. Oh, my leverage. Oh, my lot size. Oh, my what percentage of my capital I'm going to risk. Boom, boom, boom. But now, again, with a $100 account where I can get into a trade that costs up to $15,000, first thing I do before I determine, how much, before I even care about how much it costs me to get into the trade, first thing I do is just do the math on the lot sizes. So again, 367 pips off a mini lot, I'm looking at about $40. All right. So that's all already well over my little 2% risk. Do you understand what I'm saying? So again, I'm going to do it, but I would have known this wouldn't have been like an ideal trade to analyze on a $100 account with only risking 2%. You feel me? So, but still, that'll be about $40 that you're risking to lose. Okay. And now we got to do the math on the flip side. All right. 739 pips. Obviously, that's about $73 that you're going to make if this trade goes in your favor, taking out that same, or that, taking out a micro lot. All right. But if we did a mini, okay, a mini at $1 per pip, well, you guessed it, $367. So you can't even take out the mini. So you don't even know how much it costs to take out the micro or the mini, but you know off rip that you can't take out a mini. So you don't even look at the mini or the standards. You just work within the micro lot. And now you already know that 40 is all. I can tell this, that's probably 40% because 50% will be 50 pips, right? Roughly. So you're risking about 40% of your capital, right? With the 40 pip stop loss. But again, if you're okay with that, then you're okay with that. You understand me? Just know that if you do it, I mean, if you get another scenario like this, well, if the trade goes against you, like let's just say you lose this, like we could still lose this. So we lose this trade. Well, we lost $40, so we got 60 left in the account. Okay. And then we see the opportunity again and we risk the same amount, right? Well, now we've only taken about 2 trades and our account is pretty much blown. You know what I'm saying? Yeah, we got the 20 bucks in there, but it's just now it's so hard to maneuver with that. You understand what I'm saying? So again, it's not that you can't do it, guys. All right. It's your preference on what percentage of your capital you are willing to risk on any given trade. Obviously, the smaller your percentage that you're willing to risk, the more trades you will be able to lose and still survive and get into more trades. But the more percentage you're willing to risk, like the higher amount of the percentage you're willing to risk, then you have no room for error, right? You cannot lose maybe more than 1 or 2 trades before blowing your account. So you got to pick your poison. And that's where, you kind of fine tune what percentage works best for you.